Hi, everybody. Welcome to episode 9 of The Bulls and Kangaroos. Good morning, Stephen.
Morning, Peter. How are you, mate?
Yeah, well, it's 10 o'clock in the evening for me, and it's about half 5 for you, I think, in the morning, isn't it?
Yeah,
Wednesday or Thursday?
5:35
What day are
a.m.
we? Yeah, as you said last week, we're a little bit at the streams of all the time. But hey, it's just what lies ahead of us, and we just have to deal with it. So, how's your week been?
Yeah, it's been all right, mate. It's been busy. I just feel like my timetable's full of lots of things, and we talked about how little things can cause a little bump in the road where we had a couple of tech issues, didn't we, between us? But I've been good, mate.
Yeah, exactly. That we have those little things that just come along, but I think again, this is where having a plan and we're doing our accountability just helps you to minimize these things and they don't completely derail your
Yeah.
week. So yeah, no, 100% agree. So for me this week, it's been a bit of a it's as I say, it's been a testing. I've had a lot going on with my work and everything else like that. So let's just take a look at my video for the week and let's come back and see what questions you have for me, Stephen.
Okay, mate.
Hi everybody, this is my video for the week. I suppose there's just being a bit of accountability and honesty as well. One of the things that I'm struggling with at the minute is actually being able to spend time back testing to try and fit it in around my schedule. And as you see, I haven't really done a whole lot of back testing. So, I mean, from over the last couple of weeks, I've been able to spend very little time with it. I've had a pretty busy schedule at work and a few other things going on. So it's been a bit tough to actually spend the time. This comes down to how important it is to actually make sure you choose the right trading time frame that fits around your schedule. And I know because I'm struggling to have so much time to do the back testing, is I'm going to need a strategy or a time frame that means I need to be able to spend maybe five 5 to 10 minutes maximum checking my charts and setting up my trades, and that's why I trade the daily time frame. And you'll notice that Stephen trades the 4 hour because he does have that little bit extra time during the day. So it is absolutely paramount that you fit your the time frame that you trade has to really work around your schedule and not the other way around. I was guilty of this for several years where I was trading 30-minute time frames and 1 hour. I was believing this trader that was telling me, oh, yeah, you can get up in the morning, you can trade from 7 in the morning until around about 8:30. You can have your trade in place, you can go off to work, and everything will be great, and you'll make money when you come home. The reality of doing that is it doesn't work. I wasn't able to be consistent and persistent in the strategy. So it failed for me. Even if the strategy did work, it failed for me because it was the time frame just didn't fit my schedule, whereas this particular strategy does. So just to summarize where we're at this at the minute, I've done started from 2010, and as a result, we're already up to 2000 and end of 2015. So we've got 5 years, and during 5 years, we've only had 14 trades, and which means we've got a net value of 8%. Now, that return isn't particularly good. I would have hoped that we would have seen some more trades in there, but look, that's why we do the back testing to see whether a chart is viable or not. And you may recall from my video last week, I had actually spotted a scenario where losing trades were coming from where I was actually getting touches on the wick rather than the body. And there was a situation where you'll see these two trades here and this one here. 3 out of the 4 were losing trades. So if we'd taken those 3 trades out, let's just do an exercise here. Let's just take them out and we take out the one winner as well. And this is all about when we'll be doing the next stage of this will be to start seeing how we can tweak the process. So there we are. We would have ended up with 10%. So an extra 2% is what we would have ended up with. But again, for the time being, we have to stick with the strategy rules, and then we can start looking at this as part of the next stage. Okay, guys, that completes my short video for the week. Back to Stephen.
Okay, Peter. So there's a bit of a reality check, I suppose, in there, isn't there? Because trying to find the time frame that works around your life is what you were talking about in there, wasn't it?
Absolutely, yeah, yeah.
Yeah. And as you say, trying to force the trading time frame or the strategy doesn't really work, does it? And it's
No,
probably destined to fail, I would say, over the long term.
yeah, yeah, yeah.
You mentioned, and you sounded a little bit downhearted when you talked about it was an 8% return on, but there's power in, if you've got a positive expectancy on a pair, on a strategy, and you get
Mm.
to the end of the back testing results, you can start to look at another pairs to that portfolio. And I
Yeah,
suppose, yeah,
yeah, no, yeah, it is. I suppose, as you say that if you take that one pair and then you multiply that by 8 or 10 pairs, all of a sudden it doesn't seem quite so bad.
yeah,
But it's
exactly.
just, I think what it is, we think we're going to see a lot more trades, and we just say, oh yeah, I'm definitely going to see 100 trades here. But the way
Yeah,
it's going, I mean, it's not looking like we'll even get to 50. But
yeah,
if that's the reality of it, that's the reality, and you know, that's what the back testing is showing us. And that's the reason why we do it. So we get an
absolutely,
actual
absolutely.
proper tangible. So somebody says, "Oh yeah, we'll get 100 trades out of that strategy." So well, based on my back testing, you won't. You'll only get 50, for example, or 55, or whatever it might be.
And it sets your expectations, doesn't it? And that's what's important, because if you just go into a live trading scenario without that knowledge that you've just the frequency or the number of trades, you may be forever thinking, is this normal? Is this okay on this pair? Is this all I should expect from it? But when you've got that back testing background knowledge, whatever it may be and whatever the results were, you've then got you've got a frame of reference for how this thing in
Mm,
front of you
mm.
is behaving. So, it's all adding to that sort of knowledge base, isn't it, for when you go forward?
Yeah, it does. It adds to that knowledge base, and as you say, that it just helps to keep you calm and not be thinking, "Oh, have I missed something? Oh, this can't be right." The guy said it was going to do a lot more trades than this. Whereas when you've done it yourself, done that back testing, you just go, "Well, yeah, this is what happened in back testing. I'm not expecting to see another trade on this pair for another 3 or 4 weeks. This is quite normal for it." And
Exactly,
so
mate.
you
Exactly.
know, and I think that it just keeps you calm, keeps you focused, and keeps you disciplined.
Yeah.
Keeps
Okay.
you, as we like to say every week, be part of those 10%, 100% trades your trading plan every week. It just keeps you in that mode the whole time.
Yeah. No, that's good, mate. That's good.
And as regards to yourself, Stephen, let's take a look at your video for the week. So, what basically were you doing this week before we get started?
So I was following the dollar yen, and I was looking for an
Hmm.
opportunity to get an entry because I'd
Hmm.
identified that price was a long-term high, and
Okay,
I could see it, and I wanted to try and figure out how to get in. And then, yeah, and then, well, you'll see how that all plays
brilliant,
out, and what I think about it.
great. Let's take a look at your video.
Okay, so what I wanted to talk about today was I've been following a pair, the dollar yen, and I've been watching it and for a while now and just tracking it, and I've been seeing that it was getting to a particular level. And so I'm going to talk about that level, how significant that level was, the opportunities or the way I was trying to get involved in the trade and how I couldn't, what I did or what I discovered in sharing some conversations and spending some time with other traders and listening to my trading coach and what he had to say about the situation, and really just giving you some insight into why it's important to stay in touch with other traders and other people who are of a like mind and are, on the same sort of journey or path as you are yourself. Because, like we say in the description on our YouTube page there, it can be an isolating experience being a Forex trader because you spend a lot of time on your own in front of the screen, and it's easy to get a little bit detached. And so, checking in with other, as I say, like minded people really gives you another view of things and helps you to think about how you might approach things differently or to see things that you previously couldn't see. So, I'm going to just jump onto this chart and I'll take you through what I was thinking. So, there we are. We're in the dollar yen on the daily time frame, and I'd seen the price action come up to this level around 152 evens, and it's bumbling along and it gets back up to this level 152s again, and I'm looking and I'm thinking to myself, okay, there's a bit of resistance here, so what's going on? So I started scrolling back, and by that I mean bunching up the charts, trying to see what else has been going on in the past. You can see there's a big spike up to 152 here, and that was a couple of years ago, 2022. And then I'm keeping going backwards, and the way I've got my chart set up on NinjaTrader, that takes me down to what, 2003. So without having to load hundreds and hundreds more bars, what I did is I jumped onto Trading View, and I'll just show you. I'll drag this across. Let's see if this works, shall I? Uh, Trading View page. While that's thinking about it, what I will say is that I had to go all the way back to 1990. So what's that? 34 years ago. 34 years ago since price had last been at that 152 level. So you start without too much emotional attachment to it, but you can start getting a little bit excited thinking there's definitely going to be a reaction at this level. And I just want to make sure that I'm positioning myself and I'm ready for it, whatever it may be. But you still go through your analysis, okay? That trading view is not going to come on, and this is frozen a little bit. Okay, so this is the trading view chart of on the dollar yen, and this is a monthly chart. Okay, so here we are in 2024. At the time when I was looking at it, there's the that high spike I just showed you there, and then you have to go all the way back to where this arrow is pointing there, 1990. That is, to be able to even see the last time that price was up at that level. So that's what I'm looking at, and I'm getting excited, and I'm thinking we might be onto something here, and how's that going to work for me? So just spreading this back out again, dropping down to the 240. So just think, I'm looking at this range now. This is a range, and I'll just show you that on the 240. All right, That's loading up. So yeah, I've done my analysis. I've predicted where I might expect targets to go. I'm looking at that range. I'm thinking the bottom of that range and being below that might be a good place to put my stop loss. And I'm looking at that accordingly. So what I'm looking at there, I suppose, is in general terms this whole range. You see, and I'm thinking stops below here, but I'm seeing the prices bouncing and bumping its head for quite a while on this 152 level. And what I'm looking for and what my strategy is and what my approach is that I'm looking for price to put in a what really I'm looking for price to come up above the 152 line. I'm looking for it to come back down again, giving me basically a retest, even coming in back into the structure, and then to move again, and then to a predicted target level. But I didn't get that, and you'll see that the movement that I was presented with was this candle. So this candle, this large bullish candle, and that happened for me. That was at the 10:30 close, so I was asleep then. So I didn't see that breakout effectively, right? And then the next candle that carried on in a bullish manner, and then when I'm looking at the charts again, around about the time of this 06:30 candle close, that move, that initial move above that 152 levels already happened. So I'm thinking, oh, okay, I wasn't able to take an opportunity there. Um, what is next for me? So I'm looking at this again and I'm thinking, right, we've gone back into a range, getting all my measurements, getting my stop loss down below the bottom of this range. I'm thinking, similarly, I'm going to look for a little break up, a move to the upside, a pullback, and then I'm going to go again to my next target level. And look what happened. Price just went up, broke out of that range, that consolidation pattern there, and just carried on. And so on these two occasions, I felt like I was ready to get involved. I knew what I wanted to do, but the the price action on this pair didn't behave the way I wanted it to. And that's not that I'm expecting it to the market to move in the way I want to, but I didn't have a way of getting involved. And and it just so happened that when I was listening to one of my trading coaches in one of the live rooms that I attend, he was explaining that the dollar yen in particular has a characteristic around it where it doesn't follow what we sort of see on lots of other pairs, which is that price breaks up and then pulls back into structure and then goes again. He explained to me that on the dollar yen pair, you sometimes see these areas of consolidation, and then there's a breakout, and almost not without warning, but the fact that you've got that consolidation is an indication that on this pair anyway, that there will, potentially there's a continuation about to happen. So although I've tested this pair using my the strategy that I've already explained, which is the breakout, the retest, and then the go again, I've now got something else that I can look at, you see, and I can go back over this pair, over the 10 years that I tested this pair, and I can start, now that I've got that extra insight or that extra knowledge that I've gained from just, listening to somebody who knows what they're talking about, who's got many years experience for Forex trading, whose opinions I respect and I listen to, and, I take on board. I've now got something else that I can start adding to my trading repertoire, if you will, and it gives me something to go away and have a little test. And it's just an example of how you're always reviewing, you're always trying to move forward and develop and think of different ways. And as long as you're doing that in an ordered, sort of controlled way, and you're not just jumping from one idea to the next, you can really start building on your tool chest and the amount of things that you've got available to you. And as long as you're not just randomly applying things that you hear, um, uh, from all kinds of different sources, because there's plenty of them out there, um, you can start building it, and it gives you confidence. It just gives you a bit more confidence in what you're doing, and it helps with your belief that you're able to understand what you're being explained, and you can add to it. And especially when you start seeing results, like I had a decent like years live trading last year, and it really starts to crystallize all of the work that you've been doing, and you stick to your day to day. You go through all of your procedures, and you just keep turning up, and you keep turning up, and you deploy your strategy that you know you've got tested, and that you know you've got back testing results for, and it's got a positive expectancy. And then you start adding, and you might add more pairs, or in this case, as in this case, you might start adding a different approach, but always go back, test it, do your own work, make sure that you're happy with any results that you might find. But it's really, I suppose, the point of this conversation was, if I wasn't spending time listening to different people and people who I respect and I've got time for, and listen to their expertise, maybe I'd never have known that characteristic of the dollar yen. Now, that's what he's found in his testing and his back testing, and the years he spent looking at this pair and how it behaves. But I've got something else that I can get my teeth into now, so looking forward to doing that.
Okay, Stephen. Yeah, great video. Obviously, there was no trades come out of it, but we know with each of these scenarios, there's always a learning point or a bit of a golden nugget to take away. So, can you just explain to all of the viewers there, what do you mean by charts having different characters?
Yeah, so um, after a while, you start seeing some similarities within a pair of how they behave in particular scenarios. And it might
Mm-hmm.
not be hard and fast, but you start thinking, oh, I've seen this pair move in this way before. And so the example that I showed there on the dolly N, which I then learned from the exposure I had to the groups. That's
Mm-hmm.
a character trait of that pair, in that
Mm-hmm.
after a bit of a bullish run, or after a run, it consolidates a little bit and then moves straight into a breakout, as opposed to
Mm-hmm.
that sort of ebb and flow, that sort of move and then pull
Mm-hmm.
back
Mm-hmm.
and then go again. So yeah, it's interesting to start picking up on those things, because you can understand them, and you can try and benefit and profit from
Yeah,
that
yeah.
knowledge.
And when you heard that, was it like a haha moment, or was it giving you some sort of confirmation of what you'd seen in your back testing?
Yeah, so like as I say in the video, I saw the price at this, I think it was 152 level, and I
Mm,
was just scrunching off the chart, and I was thinking, well, when was the last time that it had hit this? And there wasn't enough bars loaded on my Ninja Trader to be able to see it, so I went on to Trading View and went all the way back
mm,
to
mm.
1990, and I thought, raw, there's got to be something going on. By the time price gets up
Yeah,
to
yeah.
this level, there's got to be something going on. So I only had a method of entry that involved breaking above that level, pulling back into structure,
Mm,
and then going again. But after I saw that move twice, that sort of consolidation and breakout twice,
mm,
I was
mm,
thinking to myself, you know, could I just set an entry above this consolidation zone? And I stuck to my plan and said, no, I can't do that because I haven't tested it, and
mm, mm,
I'm getting a bit excited because of where the price
mm,
is, and
mm.
I'm trying to I would have broke my rules if I did that. But
Yeah,
then
yeah.
I was watching one of the live rooms that we're fortunate enough to have access to, and yeah, our trading coach Jason was saying, this pair tends to behave in this
Mm.
way, and I thought, I've just been thinking about that, and it just gave me a little boost. Yeah, gave me a little boost because I
Yeah,
was
and
thinking along
yeah,
those
and
lines.
Yeah, because and the other thing as well is when you see that other people that you trust are seeing, it does help you to think, right, okay, maybe I need to go back and look how often that has happened. I mean,
Exactly.
how are you looking to possibly review that particular thing that you've now seen
Yeah.
occur, and then you've had confirmation from somebody that both you and I trust and respect greatly. So how are you going to go about reviewing that?
I think what I'll do is I'll go back to the time where I started the back testing on that pair originally. I think I started
Hmm.
in 2013 is the time
Hmm.
frame that I started from. I think I'll go back and I'll start looking for that
Hmm.
consolidation breakout, and just highlight
Hmm.
them on the charts, and then maybe go back and have a little look at frequency, and just see if I can start building up um, yeah, a bit of knowledge around that behavior on that pair
Hmm. Hmm.
over those
Hmm.
last 10 years. That's yeah,
Yeah, yeah, you might be able to sort of like see, well, okay, it consolidates over this many candles or this many bars. And then when it does that, generally it's going to go and it maybe goes on a Thursday or a Wednesday or
yeah,
whatever it is. You never know what
yeah.
you might
No,
pick up.
exactly,
Mm.
exactly.
But
So there's
but
something there, mate.
sorry.
Yeah, there's something there for me to have a look at, definitely.
Yeah, exactly. And this all these it's all these little things that help to make us sharper and more professional and what we do, and just helps us to not squeeze every last percent out of the market, but it allows us to make sure that we don't leave easy money on the table. It's not about, squeezing every last drop out of the thing. It's about, well, okay, there's actually money on the table that I could have taken that was, not easy money, but it was low risk. And
Yeah,
I can
and
prove that it was low risk through my back testing.
Exactly, and and you didn't know, or you don't know that it's available to you, but it's just we just always constantly adding and growing and building our
Mm,
knowledge,
mm,
and
mm,
and
mm.
testing it, and your whole tool chest or your arsenal, whatever you want to call it,
Yeah,
it
yeah,
just gets bigger and broader, and
yeah,
yeah, yeah, and that's what it's about, isn't it? It's like an endless
yeah,
journey
yeah.
almost, isn't it?
And the other thing as well is what it does for me as well is it just underlines the importance. This is not trying to blow, try and boost ourselves, but it just underlines the importance of being connected with a community, watching shows like podcasts like this, where we're giving you this information and we're just helping people, and it's kind of going, you just don't feel like you're alone. And it's like, all right,
Exactly.
okay, they saw it as well. So I'm not going crazy. That kind of,
Hey,
and
mate.
I think it just helps to make you, because I think you even mentioned in the video, it's a lonely game trading.
Yeah, well, that it can be, mate. It can be, and it's not hard to find yourself in a situation where you're in your own little bubble, or even worse, you're picking up bad habits, or the things that, or you're seeing things that
Mm,
online algorithms are forcing down your tube, um,
yeah,
and we're lucky enough to be connected to a good community,
yeah,
with lots of people who are there for the right reasons and are happy to
mm,
support each
mm,
other and want to see each other do well. And that really is the power of the community, I think.
yeah, yeah, absolutely, absolutely. Was there anything before we close off the week, Steve? Was there anything else you wanted to add to the summary of your video there before we close off?
Um, other than, just staying connected, and don't get stuck in a rut, because sometimes that happens as well. You
Mm,
feel like
mm,
you're just going along, and you don't know what's next. But if you stay tuned in, you'll find ideas, and you'll
mm,
listen to other
mm,
people, and you'll get re-energized and enlivened again, and you just
mm.
keep going. You just got to keep turning up, and
Yeah,
you'll just keep growing and growing.
yeah, yeah, exactly that. And I suppose really that's to really a nice point to close off on, is just energizing, just keep going, just keep repeating. So, that's what we want people to do here. We want people to keep showing up for these shows, and just, even if there's just one or two people every week that's picking up a little tip or a little piece of little golden nugget that's just helping them to become better traders. For us, that's objective achieved. So, on that particular note, as we would like to say to close off all of our shows, please like and subscribe and leave us a comment, and please be part of that 10% of traders that 100% trade your trading plan. So until next week, have a great week. Goodbye, Stephen. Goodbye,
Cheers,
everybody.
Peter. See ya.
See
Bye.
ya. Bye bye.